Hi, this is Narasimha Kumar. Welcome to Akshay Money Management. The very important topic of four pillars of stock market. Let us see it. The basic things is required to the stock market to rally are, if you see the current scenario, we have seen the Nifty touching the three times the same levels of almost like 18,700. From there, we have seen the markets started going down periodically. Now the question is, from here, market will go down or we may see the uptrend from here. Let us see one by one the pillars of the stock market. The first important pillar for the Indian stock market is FIS. If you see, if you seen it last almost a 1.5 year, FIs were negative. So we have seen the market was in the range bound. Market has not taken the higher new heights. But if you see it from the last 4 months, from the March onwards, red bars had become a green bars. This is a FIs. FIs turned into positive from the March onwards. So today we are in the June. June, yes, we are not seeing the as much as buying in the month of May, but yes, still we are in the green in the month of June. That's the reason we are seeing the markets are in the higher direction. And the second pillar, why the FI should come, the valuations. As long as valuations are very attractive, foreign investors will invest in Indian markets. Let us see the how is the valuation as of now. Nifty, if you see, compared to last 1.5 year, markets was very high. The PEs are very high. From there, we have seen that it is coming almost like 21 PE average. It was gone almost like 27 to almost like a 40 PE. It is gone. From there, it came down to 21. So now I'm saying PE is not so much cheap, but yes, it is on the average of last 10 years. And same thing with the PB ratio. So if I put it into a one chart, whenever the red zone is there's a time we do the profit booking to our clients. If you see in 2021 October, there's a time when we pull out a lot of money from the equity and we had parked that from 90% equity, we came down as low as 30% into equity. Now it is a neutral, so we are increased the equity from 30 to 50 percentage. So today we are at somewhere at 50-50%, or for a few people 60-40, 60 in equity and 40 in debt. That is a proportion what we are managing in our Akshay Money Management customer portfolio. And why the valuations will attract you, or why the PE ratios will go down? The third pillar is corporate earnings. So this is most important because as long as you see the corporate earnings are increasing, that's the reason you will see the PE ratios are going down. When the PE ratios or valuations are very attractive, FIs will start buying it. So these are all like a three pillars. Let us see the exports and imports of India. If you see the left hand side bars, almost like a 9 years from 2012 to 2019, it is in the range bound of 300 to 330 billion dollars. If you see the last 2 years, it has been raised to almost 450 billion dollars our exports. So that is a good news. And second thing is, if you see the US share of the import from India to China, China is going down and India it is increasing. So both the ways India is much better than other countries. So this indicates the absolute return from India compared to all other countries, like it may be Singapore, Hong Kong, all these things are negative, whereas India this financial year is turned into positive 6%. And this all leads to the corporate profits. If you see the corporate profits, it has been almost like a 10 years high, 4.3 percentage towards GDP profits. Our corporate profits are increased. So that is a good news to Indian stock markets. And the last pillar is our micro and macroeconomics. So if you see the inflation, CPI inflation average is 6.5, we are below 5, which is a good news for our Indian inflation. And if you see the USA, yes, that is also going down because if you see the inflation at 7.7% it was there, it came down to right now 4%. But yes, their average is 2%. So we need to see 1 or 2 quarters more how much it can come down. So these are the main four pillars of stock market. First thing is microeconomics. If microeconomics are good, then obviously corporate earnings will be good. Corporate earnings are good. The valuations will be better. These all things makes FIs to come into the market. When all this comes into market, then your stock market will see the uptrend. And coming back to the Nifty levels, a lot of questions are coming on the Nifty levels. A lot of customers are asking this 18,000 level is the third time Nifty is testing. Last two times, if you see it, Nifty had touched almost the same levels. From there, market has gone down. Second time also is gone down. So now third time, will market will going to go down from this level? So if you ask me, there is a theory called as ascending triangle. So whenever the ascending triangle, the theory is whenever Nifty touches or any graph touches the third time same levels, now this time we should have a breakout. So from here, we are expecting market should go higher, not the downtrend. So I'm not saying that Nifty will be in the one side direction smooth way. There will be a lot of volatility will be there because the one reason is we have seen that a lot of monsoons are not started till now in India. If monsoon does not start, CPI inflation again is going to increase. So if you see the USA Fed, they said this is not end of increasing. They said this is just a pause. They may increase it. If they increase again repo rates, again we may see the jerks in the markets, and also we have Indian elections. So these are all the things where we'll not be having a smooth ride from here. There will be like a volatility will be there. That is the opportunity where one should look into for the long-term investors. So thank you for watching Akshay Money Management. Let us catch up in the next series. Thank you.